The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's What's Hot and What's Not. Sorry we started a little bit late. We're getting ready. If you guys don't remember that we have the Education Summit starting tomorrow, so getting some last minute kind of logistics figured out on that one. So if you guys are not registered yet, we will post a link later today. Very, very excited about it. It's going to be a lot of fun. I know I built two great presentations for you guys, and again, whew, lot going on. Holiday weekend. I hope everybody was safe. I hope everybody had some time to recharge their batteries, to remember those that are fallen. And with that being said, let's just jump right in today. We got a lot to cover. I want to make sure that we get it all in. All right, first things first, guys. For those of you that don't know me, welcome. As I mentioned, my name is Brian Caprice, and I'm the president and CEO of Keep Trading Simple. Just to give you kind of a quick 1 minute long kind of background on me, I've been trading since about the 2000 time frame. Started basically the same way everybody else did. I went to some seminars, got some books. Back in 2000, the internet was kind of coming about, but you didn't really have YouTube. I didn't have those kinds of things. So I kind of went down the path that most retail traders did, learned how to trade stocks, options, found currencies about 6 years in, fell in love with that market, realized that I really, really had a passion for the markets as well as teaching and helping other people, became a financial advisor, learned kind of what the markets look like and looked at not only the income side, but also the wealth side of trading. Being on the inside, getting to see a lot of different things. Like, at that point, I'd never seen a bond trading floor, and I was just blown away with what it looked like. And then realized very, very fast that as an advisor, I really didn't have the ability to do what I thought advisors really did. So I left that industry and I went out and actually started to teach people how to trade and traveled around for about 6 years, met my wife. This is the most recent family picture. The boys are now, I guess, a year older and the baby is now 2. So she's, doesn't like to be held like that. And her hair is down to her elbows at this point. So, yeah, life flies. I guess I got to update everything. The only difference between me and that picture is, COVID-19, I, probably have gained 25 pounds with the, pandemic. The hair is obviously longer. I think like everybody in the same situation, but for the most part, nothing else has really changed. So what we're going to do today is I'm going to break down different charts. I'm going to talk about indices, Forex, as well as commodities. My trading style is a little bit different. I'm not an indicator-based trader. I am what's called a price action trader. So I read candlesticks. You guys are going to see some lines on my charts. Not really even lines. You'll see more rectangles than anything else. So if you're wondering what my rectangles are, typically I focus mostly on supply and demand and kind of the I don't know, the world of that, kind of belief. With that being said, let's just jump right into kind of what we're going to cover today. All right. So first things first, Nadex risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Trading decisions that you make are solely your responsibility and at your own risk. Remember, there's no such thing as, well, Brian said, okay? My kids do that all the time. That's not what this is about. We're all adults here. If you like my analysis and you agree with my analysis and you take a trade, it is 100% on you. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, Nadex is the registered trademark of the IG Group, for those of you that are not unfamiliar with them. So what are we going to cover today? Very simply, first things first, let's cover upcoming news events. This is not a very, very big week, but there is some news headlines that I do want to kind of bring into focus. For those of you that have not looked at the market, the dollar is kind of getting slammed this morning. It's getting beat 9 ways to Sunday at this point. And a lot of it is from kind of news releases from the weekend and media. And again, I want to cover those real quick. Then I'll dive into indices and we'll talk about what happened with them. If you guys were here last week, you remember me mentioning that I expected the week, probably most likely going into a holiday weekend, to end with some type of green action. And we had some great rallying last week, and we'll cover that. But we are now approaching areas where we're hitting levels of supply, okay? And we're already seeing kind of, some of the price pullback from it. We'll cover Forex, and as I mentioned, the dollar is just getting absolutely slammed. But what that means is there's a lot of trading opportunity out there. I actually have a student that he's been riding down the dollar CAD, and he's like, it just won't stop. It just keeps going. It's like, yeah, absolutely. That's the currency market. And then we'll cover commodities. And then again, I want to bring up the Education Summit. With Nadex support on, I think they've already linked the 2 different days in there. If you guys are not signed up, you do not have to attend all 8 sessions, but there's just one sign up for each day. So day 1 and day 2, please make sure you get signed up for those. As I mentioned, even if there's only one that you want to listen to, or maybe 2 each day that when you listen to, please get in there. A lot of people have put a lot of time into this. We want to give you guys as much as we possibly can. And I'll tell you right now, I've seen the content, I've seen the slides, and I've talked to the individuals. There's some really, really good content in the next 2 days, guys. And this is entirely put together to help you guys as much as possible. So please make sure you get registered for that if you haven't already. Okay. So first things first, let's go right into my big website, Forex Factory. Okay. And again, there's many different websites. I'll actually use Daily FX later when we're going to talk about gold. I like, I'm going to use their charts for that. As you can see, again, I use this one because the scanner is right up front. It's very, very easy. You guys can see that the euro dollar up big, pound dollar up huge. Dollar yen is down, but it's obviously retracing in the last about hour. Dollar Swiss, I'm surprised that this is not double what it is now, but it is kind of retracing in the last kind of 15, 20 minutes. Dollar CAD down 152. That is huge. That's a big, big, gigantic move right there. Aussie dollar up big as well. Euro pound down 43, and pound yen 150, almost the top position, but the dollar CAD has stolen it. So again, a lot of pound strength that we're seeing. So as far as the week goes, there's really not a ton this week. This is the listing right now of all the what's considered the high and medium strength kind of news releases. As you can see, really not a whole lot today. At the end of the day today, the BOC is speaking at 5, and then there's a New Zealand financial stability report. Probably not huge movers in either one of those two. U.S. consumer confidence today, you can see, was a little bit worse than expected as well. Not really surprised, but again, it could be much, much worse than 86. Going into tomorrow, we have some Euro news early. The ECB is talking. And again, that may bump the market around tomorrow morning. We may get a bit of a retrace on what we're seeing right now in the European pairs. And then besides that, we don't really have any news till tomorrow night. Now, if you guys have heard me speak, even if you are not a currency trader, Aussie news at night is incredible. You should absolutely be looking at those things at night. Do it before you go to bed. See if you can find any trades. These are great, especially when you see high impact news. Now, private capital expenditures quarter over quarter, it's expected to be a bad number. If this number does not disappoint, you can expect to see this one bounce pretty nice. Okay. Again, that's why I love these trades. Now, Thursday morning is actually kind of a big morning. Okay. We have our preliminary GDP figures, and this is quarter over quarter. So this is going to be kind of our first quarterly assessment of what COVID-19 has done to the U.S. economy. Okay. Again, obviously we've cut back, everybody is reopening, but this is going to give us a true read. Now, remember, the last election cycle, right? The last election cycle was all about, kind of what was happening, right? It was all about, how much can we grow? Can we get, can we get to 3%? That was kind of the big talk. And they're like, oh, it'll never happen. You'll never be able to sustain it. And we were doing great with it. And then all of a sudden COVID-19 cranked in, and that's where we're starting to get these negatives. So the preliminary GDP, I think, is going to be pretty important. Then we have core durable goods. And, again, those numbers are expected to be pretty negative, minus 14, minus 17%. If those don't come in as bad, again, that could give us a little bit of a bounce. And then there's that dreaded unemployment claim. Still at 2 million. And again, remember, this is not the continuous claim. This is the new claim. Okay. Now, I think that a lot of our focus will start changing now. Unemployment claims are great, right? This was a big number for the last couple of weeks. It actually provided many bounces in the overall stock market, but this is a first claim number. Okay. It's a first claim number. Obviously, there are millions and millions and millions of people on unemployment. So the continuous claim number isn't listed and isn't ranked as high because, again, this is obviously a currency-based site for the most part. But continuous claims, this will give us a true reading of how many people are starting to go back to work. As things are reopening, that will start to kind of reignite the economy. Well, we'll see that directly in the unemployment claim numbers, especially the continuous claim. So that's kind of a glimpse into kind of a secret number you guys should be looking at. Start looking for those continuous claims, as well as oil this week, because yesterday was a holiday. Oil inventory reports, as well as natural gas, will both be Thursday this week at 10:30 and 11 o'clock a.m. All right. So if you guys are oil traders or commodities, don't forget Monday holiday, oil will be on Thursday. Now going to Friday, right? Friday, we basically have CAD numbers, and that's more or less it. Powell is speaking at 11 o'clock, and this is going to be, I'm kind of looking at this number or this news kind of speech, and what I'm thinking is reversal on Friday. Whatever kind of the morning trend is, and again, the CAD, we have some personal spending numbers, which I think it'll be important. We have Chicago PMI, we have the Verizon University of Michigan consumer sentiment, which is also important. But the way that this typically unfolds is we typically have reversals at 10, 10:30, 11's a little bit late. But what will happen is that'll be a little bit delayed because whatever Powell says on Friday is where the trend will go in the afternoon. Okay. So what I mean by that is we could have all negative. Everything up here could be negative, right? We could see the markets heading straight down, and something that Powell says could be about stimulus, could be about making the economy stronger. That could set the markets on edge. Or vice versa. If the morning sounds great because everybody expects Powell to say something, that could be a major turning point leading us into a red weekend. Okay. So again, that's kind of a I don't know, bird's eye view, but for the most part, that's Friday what I'm looking at. I'm not focusing on a lot of these earlier numbers. I'll obviously play CAD, but I think him speaking on Friday at 11 o'clock is really, I think that's going to really turn the markets. I think that's going to be a big kind of focusing piece. All right. So with that said, let me drag this back out. Let me pull, boom, charts back up again. So first things first, let's go over into the NQ. Okay. So as you guys know, I cover NQ, the S&P, and the Dow. And for me, NQ has been, for lack of a better word, it's been the trading pair. Why? It's been the most responsive. You can see that from where our high was before the whole COVID-19 thing started kicking in early February, it has been able to come all the way back up and almost get back into the range where we're getting close to new highs again, right? S&P, not so much. Dow, even worse. NQ has been the one that has been kind of more pushing. And again, the reason why, again, this is no surprise, NQ is technology based. With people and all these stay-at-home orders, technology has been embraced like never before. I mean, like when grandparents are talking about, oh, we could just set up a Zoom session. I mean, when someone that's, not the greatest with computers is talking about setting up Zoom sessions, technology is, forcing itself into all homes, okay? So where we are right now, you can see what I would call very, very high on the curve, okay? We have a daily supply zone up here where, again, that's an area that I marked off last week, talking about if price was able to get up into that range, we could be looking for sells. Now you can see today, we've gotten very, very close, okay? Very, very close. But now we're looking at a little bit of red, right? We're kind of pulling back from that zone. Typically, when we were high, we are looking for some type of reversal or, kind of some slowing. So we had it there, and it looks like we missed by just a very, very tiny bit on this one. And it's kind of pushing to the downside. So this is actually ECN data, okay? This is coming actually from a foreign brokerage firm. So the data on this one is slightly off, but that turning zone was about 96. Where are we at here? Let's see, hold on. About 96, probably 25, 20-ish is most likely where that kind of entry was. And you can see it's pushing back, and it's going to go back down to most likely the 92, probably 68 range, 67 range to the downside. Now, in looking at this, again, because price hasn't been up here for so long, we're forced to use some of these higher time frames. And again, here's your 4-hour chart. And you can see, I mean, yes, obviously down here around where that target is, that 92, 68-ish area, you're seeing that the last time price was there, it took a nice little bounce, right? This was actually supposed to be right here, okay? In this area is where we're looking for bounces at, right? And that's approximately right about in there, okay? So below that, if we were able to get back down to that level, again, depending on the time of day, today it looks like it's probably gonna, we'll see what the end of day looks like, but it looks like it wants to continue to push to the downside. Again, this is on 4-hour charts. If we get a bit lower, again, we could have selling down here in 89.72, okay? Oops, there we go. All right, dropping even lower, okay? On the lower time frames, you can see this is kind of what the morning looked like, right? We made an attempt to push higher, and the reason I'm showing you this is because this is a pattern that we're going to actually see over in currencies as well that I want you guys to be looking out for. See how price pushed higher and it failed to go higher, and then it pushed back? It came up again and didn't go as high. So here is a short-term trade set up this morning based off of this level, right, in there. I mean, you can see since that time, I mean, it's just obviously collapsed all the way to the downside. Looking at what it could run into, there is a small zone sitting right, I need to move that a little bit, right in that area, okay? That price zone is coming in, it'll come in at approximately 93.90-ish range. I think we could either settle there at day's end or use that as a bounce. It depends on what it does over the next hour or two. But to me, it looks like that could be an area where if we can close there, this could give us somewhat of a rally going into tomorrow, or somewhat of at least a slowdown or a basing level. Okay. I meant to pull it up. Hold on, let me grab it real quick for you guys. Where is it? All right, I wanted to pull up the touch brackets for this one real quick. So if we're looking at tech here, all right. So it looks like right now, it looks like we have touch brackets sitting at. Let's see. We have one sitting at 94.11. Let's see, 94.11. Which again on this chart would be just a bit lower, but I'll leave it here. Just remember, all these are going to be, the price is actually going to be a bit lower than this. We have a 94.11 touch bracket. It looks like we have a 93.81 touch bracket. 93.81 touch bracket, which again is probably a bit far. Actually, you know what? That actually may not be that bad. That is actually touch bracket, or I'm sorry, knockout bracket 7. Okay, that's knockout bracket number 7. Let's see, the next one is sitting at 93.51, which should be there. And the next one would be at 93.21, which should be right about there. Huh, that's not bad. So, all right, so actually, this knockout number, what was that? What did I say? Number 7? Knockout number 7 ends at 53, what is it? 31. Right there. So that is actually not a horrible touch bracket. It would be from here up to this level. Okay, let's move this out of the way. Let's lock that one in and delete that one. All right, so there's a position, actually a knocker right there. If you guys also like this on its, and again, you guys can find this on the hourly, you can see that last time the price popped into this zone, it had a pretty nice bounce out of it. It's offering a pretty interesting opportunity. Again, the zone for me does go a little bit beyond where that touch bracket is. And again, remember, my numbers are a little bit high here. It would actually be a bit lower, but actually not a bad position there. Not a bad position at all. Again, if you guys are looking to get long. And again, depending on the time of day matters, depending on who's speaking, and what type of news releases are coming out. Again, this could be an interesting little target setup. Going into the S&P, all right? So S&P is not quite as high, right? Looking on a daily, right? You guys can see where the NQ is all the way up top. This one is kind of sitting over in this range. Now, last week, we talked about taking shorts off of this arrow. And I put the arrow there on purpose just to say, hey, listen, keep an eye on this one. You can see that not only did we have, basically one day down, it came back and retested again and then continued to push down. And now we're starting to get kind of a rally off of that lower zone. So here was our call from last week. But for me on this one, I'm really looking for, let's see. So where price is right now, it's sitting right in this level. So there's a small level right here, but I think really for me on this one, I think I'm going to wait till this one pushes a bit higher. And when I say by a bit higher, I want this to get back up into this kind of 93.10-ish range. I think, I'm sorry, 91.10. I think that's a better place for us to get short. I think right now it is still continuing to kind of do a little bit of a grind up, right? And again, looking at the candles, what it's going through right here, it just continued to push down. So yeah, this zone up top, again, marked off by the 2 purple lines, you can see it hit and dropped, and we're getting, it's within striking distance right now. We're talking about being about 100 points away. So keep that one on your radar for later this week. I think that's not bad. Downside, where we'd be looking to get long, again, this is a 4 hour, so these zones are typically pretty good. It looks like there's a zone sitting here potentially at 28.13 on an hourly. Let's check that one out. Yeah, I would use the same thing. Actually, if you wanted to drop it a little bit lower, you could get in about 27.88. On this guy, let's see. We have touch brackets. I'm going to look at the floors of these touch brackets. Yeah, we got a while to go in any of these touch brackets to the downside. Top side. Yeah, top side, we got a little bit as well. The top side, what is it? Knockout number 2 is 30.40. So yeah, we got a bit either way. So we got to bust some brackets. So maybe we'll get the movement today and bust it. You guys can see right now over the last hour, 2 hours, it really hasn't, it's kind of stagnated in the same range. Again, not moving as much. And after this kind of rally up from, early morning up, not necessarily surprised. Let's see. That started at, yeah, like super, basically 3 a.m. till about 3 a.m. yesterday till about 8 o'clock is where this one is more or less stopped. Okay, so It does look like it wants to come to the downside, but there's not really, again, with all the spacing in here, and again, being a holiday, kind of holiday candles, not a ton great in there. And again, here was that trade from last week, those setups, okay? Going into the Dow. So the Dow, same thing. The Dow is actually my least favorite. You can see NQ up top, S&P right here, Dow right here, okay? So Dow has actually started to push. We actually had some things that we had talked about last week. This was one of the things we set up. You guys can see that it did come in and ended up bouncing up from what we had talked about at our previous session. So we'll delete these off now. Let's kind of go across. And again, that was a touch bracket position as well. It's not going to let me select it. I'll have to delete that one on a larger time frame. All right. Where we are right now, let's see. For me, this is more reminiscent of the NQ position. Obviously, we can see that we have supply zone way higher on the 4 hour. Again, that's quite a distance away. Let's take the auto scroll function off. All right, so we do have a zone sitting right here. Oops, right there. Okay, again, that would be the top of the gap. The last time the price was here, we had a very large imbalance and it kind of slammed to the downside. So at least that's giving us more of kind of a near-term target, right? And it looks like that price is sitting at about 25,583. So that's about 1 day's worth of movement away. It looks like we're looking at 25.9. Let's see, let me check touch brackets on this guy. All right, so looks like the highest ceiling on the knockout, I don't know why I keep saying touch brackets today. The highest ceiling on the knockouts is 25,430. And that one would be up there at 25,964. So it looks like we need about a day's worth of movement to bust these brackets and push us a bit higher. The closest touch bracket right now, and the indicative value of this one is, for Nadex, is 24,978. And it looks like the lowest ceiling right now is at 25,130. Okay. And if you guys are not sure where I'm pulling this from, what I'm looking at is the indicative value. And again, I'm going to be slightly off over here, but you can see the lowest one is 25,130. Okay. So it looks like if this guy breaks, we should get enough of a bump. We're going to be in this range in about 2 brackets. So when knockout number 2 gets broken, that should give us the bracket that we are looking for up top. And that may give us a shorting opportunity as well. But for me, at least the Dow, as far as an hourly position goes, you can see this one is not, I would say, not stalling as bad as the S&P. This one is continuing to push forward. And a lot of this, I believe, is because we have the reopening of the economy, or the starting of the reopening of the economy. Where S&P, you guys can see that over the hourly, we've already started to kind of turn and peak and put lower lows in. The Dow has actually done okay. We haven't really put lower lows in yet. And obviously NQ on the hourly is just, it's just collapsing. It's just coming to the downside. So again, this one is kind of a little bit ahead of the curve. And again, industrial reopening, less need for technology. I know last week I heard that like Zoom and somebody else was just getting absolutely hammered because people are starting to go back to work and they're not going to rely upon those things. So again, this is kind of like your early adopters that shot this thing high is also now is what's costing it. And you're seeing the kind of the industrials come back. All right. So let's dive into the currency realm. There's a lot of stuff going in the currency realm. Before I jump, actually, again, with a lot of the news this week, this is being dominated by headlines. I didn't cover the headlines too much, but what I mean by headlines is come down here and look at some of the latest things that people are talking about, right? Larry Kudlow is talking about China's handling the virus is bad. Dollar cost averaging, this is like the big trap for the stock market. You're talking about monetary policy. Consumer confidence is stabilizing, which is good. But look what we have down here. China will step up preparedness for military combat. Germany said be prepared for lifting travel warnings. Further economic cuts for global recession bottoming out. Okay, ECB buying German bonds to kind of help their economy. So you're hearing news that could definitely, again, lifting travel restrictions, pointing fingers at China. China saying that we will prepare for military combat. Again, these are the things that kind of affect our overall markets, right? So again, that's kind of what's driving the indices right now. It's not actual economic figures. So diving into currencies, again, currencies are nuts right now, okay? The Aussie dollar is up 100 pips in the last 24 hours. But you can see after this large movement in price, looking at a little bit higher of a time frame, and again, I'm going from, when I say a little bit higher, I'm going from a 30-minute up to an hourly. You can see we're about 40 pips away. It's about half a day's worth of movement. There's a great area, and I actually think it coincides with a 4-hour level. Yeah, it's coinciding with a bit of a 4-hour level. Got got a little bit of a sell area up there, a little bit of a sell area. Okay, now this is not a knockout based pair. I keep sending emails in that hey, listen, we need to get this, we need to get this, we need to get this. But this would be a pretty nice little setup up here for any of you currency traders. It's not a today trade. It's probably going to be a tomorrow if we continue this rally against the dollar weakening. And what that is getting entries around 66.94 and taking this for a nice 3-to-1 to the downside to about 66.53. So it's about a 40 pip mover. Again, you can definitely, this is, in the binary realm as well as the call spread realm. Unfortunately, knockouts is not going to be an option for this one. Okay. And again, I mentioned this in the beginning, things that you are looking for, what could be the catalyst for this movement? Well, how about things like this, 9:30 tomorrow night, the private capital expenditures, which is considered a high importance kind of release. Okay. We can continue to kind of stabilize, get a little bit of a pullback, a little bit of a push up, nice little trade there. Now, if we were able to rally, collapse back down again, get a bit of a dollar rally back in here, there's a few different areas where tomorrow night at 9:30, if we're sitting in this zone, which we won't be, but if we are pushed all the way back down, then we could be looking to take longs on this if this number is great. Okay, so again, this is why I keep Aussie up here as well. Looking across at the Aussie Yen has something similar. And if you guys remember the pattern that I talked about, looking over here at the NQ where you had that push, it kind of pulled back down again and then made another attempt up that kind of felt what I would quote failure to go higher, right? That's exactly what we're looking for in this. Okay, we've had a push up, we've had a pullback. This could be a quick trade later on today. So we have a zone sitting right in here. And again, this is not the best drawn zone, but we could have a zone. If we pull back, there could be a nice little short position taken right off of here. And again, it's a little bit aggressive, right? It does not match everybody's risk profile, and you need to make sure that you trade at your risk profile. But there could be a nice little short position set up right here, right? Looking to capture this kind of retracement right here. And again, I'll turn this green so I don't confuse everybody with my colors. But something along these lines, right? Something along, and actually I'll just change this one, it's easier. I'm about to change this off of pink, or everyone will be pink, right? Something along those lines, right? If price comes back up. Now, this is why I am more of a price action based trader. I'm a very big believer in if this, then that. Okay, well, very simply, if price comes up, I'll be looking to take somewhat of a short. Again, it is talking about raw wise, it's only about 14 pip risk. Okay, so it's not very much. Not a knockout bracket, so this could be a call spread or a binary position. Ideally, again, I'd like to have this based around a news release. You don't typically want to do this at 12:30 in the afternoon, but this could give us a rallying period for later. Just be cautious with this one because, again, time matters. But if we pull back down again, this is an area where the last time the price was here, sellers stepped in and pushed this price down. Now, the reason why I like if this, then that is if price never comes back up, if it just continues to push down, 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 I did not take risk. I was not using a crystal ball. It was an if this, then that type position if it meets my guidelines. Now, as far as catching longs in this one, there's a few areas on the way down. Again, there's one position here, there's one position here, there's another position here. There's this one down here, and this one is a 4-hour zone. For those of you that don't trade currencies or new to currencies, again, this is just chart analysis. This 4-hour level down here at 70.09 is a great level. It's been tested. It led this entire rally. It's something that you need to keep on your radar. It may not trigger today or tomorrow, but this could be something for later in the week, maybe a Thursday or a Friday number. This could be a great target, so keep this one on your radar as well. So here's kind of an intraday kind of trade that I'd be looking at. This would be something for later in the week where I'd be interested in taking a long off this one, 70.10. Now, Euro yen. So here was what we set up last week, guys. This is where we were. Actually, no, this was not for you guys. This was actually my chart school one. Sorry, I left that on there. But again, you guys, for some of you that have watched it, you guys can see we did come up and tag. I thought I pulled all the other ones off, but we'll remove that one. Right now, where are we? We're actually sitting inside of a 4-hour zone. So you guys can't see it if you can't see the dotted lines. Here is the 4-hour zone right now. Yeah, it's a little bit on the bigger side. It's about 29 pips, and I tend to kind of like to reduce that a little bit. And again, this zone is based off the hourly up here at 118.40. So, the next time you can see we pushed up and got slammed back down right off that zone. We pushed up into the zone deeper and got pushed back down again. If we come back up into this, this 118 kind of 40-ish range, there is also a short position, which again is very similar to the Aussie yen position. We need a bit of a rally higher, as well as the Aussie. We need to push up, right? We need to push up. There's a short position in there as well. As far as going longs on this one, kind of the same idea. This one has a big area of congestion sitting right in here. And you can see that last time price was there, it did push off of it. It's truly an area of congestion. Now, depending on the time of day, I mean, we have, ECB president is speaking tomorrow. We have some European data later in the week. I'll have to look at it. Again, I like 4-hour zones, but this really spent a lot of time. It drove pretty deep into the zone, and those are typically warning signs that we're looking for somewhat of a collapse. I will say if we're able to break through this zone, the 1723 down to 1659, one thing, look at this. Look at this big area right here. I mean, price in 2 candles in 8 hours went straight up, and there's a little bit of a hiccup in here, but this is quite a large move. This is about 100 pips to the downside. That could be a really nice kind of setup. And you guys have heard me talk in the past about that Harry Potter trade that I do. Again, I've named it Harry Potter because of Harry's scar, but it's nothing more than a momentum breakout or a continuation pattern. And that would look something along. And again, I'd want to refine it. Okay, I would definitely want to refine it, but it would look something along these lines, looking of a break of this level. Because again, we've had buyers that have stepped in. If buyers fail, typically that same area becomes an area where you tend to have, oops, not bisque. I like lobster bisque, but I don't like bisque on the charts. Sellers tend to, use that same area that buyers were using as kind of levels of risk, right? So it would look something along these lines. And again, this is just very, very crude. This is very, very rough. I'd have to refine and dive into this level a little bit more. But what I'm looking at in this position, guys, is look at these two gigantic, just straight up large-bodied candles, no movement. And for those of you that know my parabolic retracement strategy, this is kind of what it is. I mean, here was a perfect example. A large pop up, and those things just can't hold. They tend to get retraced back on. And again, very large, very large bounce, little stabilization at the top, and it's held once, but you got to keep an eye on this. So again, that's coming in around approximately 1695. Looking at pound yen. So pound yen, pound yen has been a mover. Pound yen is currently up right now on the day, or actually not on the day, but in the last 24 hours, 143 pips, which coincidentally, its ATR is 136. So it's doing what it's supposed to do. But you can see on a 4-hour, what has it done? It's rallied very, very strong. And again, it rallied during this time with no US traders in the markets because we were all at barbecues. It ran right into a 4-hour zone. And you can see at this point it's actually pulled back and kind of started to kind of flip around, right? So there's the zone on the 4-hour. You can see we were pushed to the very, very brink before pushing back. Again, starting to come to the downside. So in this position, I would say, hey, listen, I am definitely bearish. We are high on the curve on the lower time frames. It ran into a 4-hour zone, which I really, really like. We had crazy movement in the last 24 hours. We put an entire daily ATR in on a holiday with no US traders to the top side. I'm looking for some type of capture to the downside here. So there's a couple ways to play this one. The pound dollar is a knockout pair. The pound yen is not, even though it tends to move a little bit more. So this is kind of a binary / you can do it with call spreads as well, but the call spreads get a little bit crazy on this one sometimes for me anyway. It may match your risk tolerance. Being 1230, the trade was probably to get into this a little bit ago. And again, let's see, there's a couple different binaries on this one. Let me see how much movement will we need in, let's see, into like a 7 a.m. position. What I'm looking at over here is I wanted to see how much, for this to move back down again. Let's throw a quick risk to reward. First, quick risk to reward on there. So it looks like we would need for a price to come back down to about, 132, right? We're just slightly off on that one, about 132. Let's see. Looking at the different, and again, I have, you guys, there is a new platform. I'm just so used to this one, I haven't kind of switched over for it yet, but I like how I can see the chart here without a lot of colors. I think it's a lot of data very, very fast. Looks like we need to drop about 75 pips on this one. So it looks like, 75 pips. We could do that by 7 a.m. tomorrow morning. It looks like something, and I love that. And if you guys aren't doing this yet, I absolutely love to focus on my risk to reward and what it would cost and what the time is. So positions like this, 130. So our target for this one would be down here at 132, right? There's a binary sitting at 132.20, which is occurring right here. Let's put this in here. 130. I was close. I missed it by 5 pips. 132.20 is sitting right there. And for me, this one right now per contract, if you were selling it, would come in at about $19.75 risk. Okay. That requires us to move about 50 pips. But if we were able to take over that 50 pips, right, in the next, let's see, in the next 18 hours, 18 and a half hours, this binary now would be for about $50. So it was risking about 20. If you took a little bit off early when it got to that area, that's about a 2.5 to 1 risk to reward trade. Those are the type of trades that I absolutely love. Okay, so again, this is not going to match everybody's risk profile, but I love playing with these. And I know a lot of people only look at dailies, but this is why you need to expand your repertoire. Here's a 7 a.m. There's going to be 11 a.m.s in there as well. Actually, I guess there won't be. It'll be a 7. I don't have the 11 a.m., but again, interesting trade setup based off one before the U.S. market tomorrow. Okay, and again, there's weekly positions as well, and again, there's options with the weekly position. That's going to require a bit more movement for the same level of risk. You need it to go down about what? About 150 pips by the end of the week. Okay, so again, there's another option there as well. Again, big rally up. There could be some problems with this one. So, yeah, a little bit of fun there. So, pound dollar. So pound dollar, this one actually has the touch brackets on the chart. Remember, I was testing the system. We actually did the same thing. We actually went off and the 4-hour zone is actually sitting here. Okay, here is the 4-hour zone right here. I'll change this so you guys can see it real quick. This is the 4-hour zone, and that's what we're bouncing off of in the other one. We have a couple hourly zones, and that's actually what we just bounced off of right here. You can see the touch brackets. We're kind of sitting right in the middle. Now, if you're at a computer, you obviously can trade touch bracket. I'm sorry, knockout. I don't know why I'm stuck on the touch brackets today, guys. I apologize. You're sitting right in the middle of that knockout range, which means you kind of have, just as much risk as you have potential for reward. I tend to like to take these when we're at the ceiling or the floor or close to it. So we do have a turn on this one. So again, this is kind of probably more of a binary position. Looking into tomorrow morning, but I would kind of keep these zones up. Now, later in the week, and what I'm looking for, this guy up top, this is actually, let me switch across. That is that's a ceiling of 2490. Okay, that's actually knockout number 6. Okay, knockout number 6 is sitting right here. Okay, so if price is able to come up into this zone, entering approximately at the 2461 area, there is a potential short position there using knockout number 6 inside of the pound dollar. Okay, now it depends on what day, what time. There's a lot of kind of parameters. It's an if this then that position. But again, you got to know where the possibilities exist. And again, we have a touch bracket sitting right on the other side of one of my potential supply zones, which is an area that I'm looking to get short in. That again, the risk is appropriate. The 3 to 1 on that one would look something along these lines, right? I don't know what price action looks like up until that area, right? Which obviously is another one of those factors. But if we come up, obviously we will break this one. We will break this touch bracket, and we have one sitting just on the other side of the zone, which is actually a perfect setup for the style of trading that I do. So, again, mark that one off. Maybe set yourself an alert for those of you that know how to set alerts. Set yourself an alert somewhere in this area, all right? Set yourself an alert right there before you enter the zone. And that alert would be what? 2450, right? Gives yourself about 20 pips worth of movement before you get in there, all right? Looking at euro pound. Now, euro pound, again, you can see pound strength, pound strength, pound strength. This one has been pushing to the downside. Now, although it's been pushing, here's kind of what we've seen. This one, a nice little kind of run up and then a kind of a turn back down again. So based off an hourly chart, we are kind of sitting in the middle of the range. It's kind of chopped back and forth. Most of the movement that has occurred since the weekend has been just straight down. Now, it is European weakness, but it is also pound strength, okay? As I mentioned a couple of weeks ago, of all the countries that I think will come out of this the best or have the easiest recovery, I believe that the pound is one of them. Why? Because of everything going on with Brexit. They were so beat up. They were basically at ground zero before this even started economically, right? Because they were already that low, they were already running, as slim as they possibly could. I feel when things start to kick up, I feel like they will have the most strength. And I believe that's what we're starting to see here. Because I don't think the pound technically is really in much better position than the euro, but you're seeing pound strength against the dollar, the yen, as well as the euro here. So it's continuing to push down. For me on this one is definitely a little bit trickier to trade. Again, a lot of the sideways movement, not a lot of entries. You can see my zones are just, it got front run here, got front run again. This isn't really the best zone. So it's been hard to get in. If you're able to catch this one at the very, very top, it's been a great short. But right now we really need to show some patience, wait for 89.87 or 88.33. That's top and bottom for this, okay? Euro dollar. Okay, so euro dollar, whoops. Hold on, let me flash this one back up. There we go. Oh, I know why it's doing that. All right, I don't know why I said that. All right, so euro dollar also just bounced off an upper time frame zone. So there's a boxer here. Let me move this box. I was doing some stuff on this one. So this is actually considered a 4-hour zone. Okay, a little bit too big. What we do typically is you want to drop it down to a lower time frame. Okay, in this case, there was a time frame sitting right here. It's an hourly time frame, upper end of the range, and it actually missed by a few pips. But again, one of the nice benefits of Nadex is we don't have to be exact. Obviously, in currencies or in futures, you got to be exact. We're going to sell it at this number. Nadex, we can get a little bit close, and because we have that predefined risk, it may match our risk tolerance or risk profile, gives us a little bit more leeway. This one is kind of setting up the same way that the pound trade is. And the reason I'm showing you this as well, when you see a short lineup in the Aussie dollar, dollars in the second position, when you see a position in the pound dollar set up and it's a short, and then you see one in the euro dollar, and you're seeing kind of the same setups across multiple pairs, that's typically kind of I don't know, I wouldn't say a telltale sign, but it's kind of a foreshadowing of what could potentially be coming when you see shorts in many different pairs, all kind of within striking distance. Kind of the same thing we have sitting here. So again, touch brackets on this one are not bad. Unfortunately, we're in the middle of the touch bracket range on this one. I like touch brackets on Eurodollar a lot. Right now, it doesn't match up for me. It's just, again, being right in the middle. Could you trade it? Sure. Could you watch it and limit your risk? Sure, but it's a lot more manual kind of entering positions versus just letting the knockout work the way that it's supposed to work. With that being said, there is a 4-hour zone right here. If we do have continued weakness inside of the dollar, right, which means that this position will continue to rise, there's another knockout that's sitting right here. Okay, knockout number, let's see, write this down. Knockout number 5 in the euro dollar actually has its knockout price, its ceiling price, right at the tail end of a 4-hour zone. It'd be sitting right here, okay, on the 4-hour. So if price is able to continue to rally, it needs to move about 126 pips. The daily ATR on this one is about 75, so it's a little bit more than a day's worth of work to get into this one. You're able to see that we have a knockout sitting right here. Okay, so it's obviously going through a zone now, but this guy right here, looking for this, right? If price is able to come up to that range. Okay, I think that's probably not a bad setup. Again, it's not a today setup. We need price to move. It's got about a day or day and a half worth of movement. This could be a position looking for Thursday. And again, remember, we'll bust a couple touch brackets on the way, give us some more options up top. But I think that's a pretty nice little position there if we're able to blow through the zone we're at right now. Dollar CAD. So dollar CAD is, for lack of a better word, it is collapsing. Okay, it is just absolutely getting destroyed. This is like a bunch of 95-pound linemen going against a bunch of 300-pound linemen at this point. It is just getting absolutely stomped on. So this is the position we set up last week. You guys remember this when we talked about it? Remember I went through the if this, then that. If price is unable to go through and breaks higher, oh well. I don't care, right? No harm, no foul. I never even entered the trade. If I didn't enter the trade, I had no risk in the position. But we still had it on there. We kept it on the radar. Well, look what happened here. We broke through this zone right here. And what do? We went all the way down, and bam, there's your 3-1. Okay, now there was a couple different ways to play this one. There was binaries, there was call spreads on this one. This one is also not a knockout bracket pair. I've sent actually messages in and said, hey, Nadex, we would absolutely love to have this one with knockouts. Look at this. How many knockouts would have been broken here just in the last 24 hours? Okay, a lot. So if you guys get as excited as I do about these, please email Nadex support and say, hey, we would love to get knockout brackets on the dollar CAD and the Aussie dollar. They are two amazing pairs. We need them. Okay, we need them. And with the movement we've had today, this would have been amazing knockout trades. But again, at this point, we've completed the target. As you can see, there is a 4-hour zone sitting right here. So if you're continuing to be short this position, be very, very cautious. And let me actually just go up to the 4-hour there. You guys can see here on the 4-hour, that's what we're running into. It's a very large zone. The last time the price was here, it was a pretty explosive move, right? It popped, it tested, and then it gapped into that zone and took off again. So we know that we have some hidden buyers here. It looks like the hidden buyers, though, are what hasn't been touched yet is actually below this level. Okay, so let me remove this and this guy. Looks like we probably have, this is where we still have those buyers, kind of coexisting at down here. Let's see, let me get this guy off. See if I can get this here. Yeah, that's good right there. All right, so I'll pull that. Looks like we have buyers stepping in right there. So that's where price gapped to and then launched itself higher down at 137.36. So again, keep that on your radar as potential areas where, again, we could be taking a long. Again, what does this do? It folds right in the story that we're trying to tell here. Aussie dollar goes a little bit higher, we short. Euro dollar goes a little bit higher, we short. Again, those are both dollar weakness. And again, pound dollar goes a little bit higher, we're looking for shorts. Those are dollar strength trades. Well, dollar CAD has been getting weak. It hits this zone again, goes a little bit lower, could be a long opportunity, dollar strength. So that's $4 strength opportunities that look like they are starting to appear right now. Dollar yen. Okay, so dollar yen. Here's a position we talked about last week. Unfortunately, you guys can see that this one just really is it's just gone sideways. This is a position that we had set up and said, hey, listen, we just missed the entry on it. That actually came, I believe, last Monday before we had met, and we haven't been able to get back to it since. Been very, very sideways. For lack of a better word, it's been disappointing. This pair is just really just not really giving us the trend that it's known for, and it's really more like this. Again, this is just a sideways-based pair. As you can see, I mean, you guys know what strangles are, right? When you expect price, you want price to stay within a specific range. I don't think we've actually hit either of these two. I mean, here's top and bottoms of touch price. It's literally stayed between that zone. It's just been kind of boring. So if you know some of those advanced strategies, how to do strangles and things like that with Nadex, this has been the pair to play with. It just hasn't given many opportunities. Now, dollar Swiss. Okay, so dollar Swiss. Remember before I said I'm actually surprised this is not as bad as it could have been, that I expected it to be double. Last week we drew this box and I said, hey, listen, this was a huge push up. Didn't really retrace, a little bit of retrace in the middle, but there's nothing there. We have to find out how to capture that. Well, look what it did. It came all the way back down again. It recaptured that, right? It absolutely recaptured that one. Okay. So the reason why it wasn't worse of a decline is because we started to run into buyers. Okay. This pair tends to be, again, when you have nice pops like this, that tends to be pretty good levels of buying and selling. And that's what it did. And again, why am I surprised it is not worth? Well, we're making comments pointed at China, and China is retaliating, saying they are preparing military options, and we're talking about a Cold War again. So what does that do? That gives us dollar weakness and Swiss strength because they are always the neutral country, right? Their neutrality is what provides them strength in times of war. Okay, and again, new Cold War, great, lovely. That's all we need at this point, right? And again, that's why price was able to stop and kind of bounce. So where would I take this now? I mean, 4-hour wise, here you go. You guys can see that it came up. And again, this is what I'm talking about. It's really, really ugly, but it respects these high quality zones. Here's that example of that failure to go higher where we push up, we pull back, and then that becomes an area of, basically your area of risk. And as you guys can see, here's a perfect example of what we had talked about, saying, hey, listen, if we can see this in the Aussie dollar, this is what you want to take. Again, new high, push back, failed to go as high, and then we use that level as risk. Boom, there's one, and it literally just bounced off of the 1 to 5 risk to reward target. Where we are now with this one, I always like to figure out what could come later this week. Where are potential setups? Obviously, we just bounced off of a 4-hour level right here. I updated the touch brackets on this one. Unfortunately, it's not super close. We're about 45 pips right now from the floor of a touch bracket. That's about a day and a half worth of movement, but it's kind of sitting in the middle of nowhere, which again, I like it to coincide with things. So I don't think that, knockout wise, this is going to be kind of the best bet on this one. I think this one would be better to play with binaries. Again, unfortunately, this is going to be more media driven, not necessarily economic news release driven. So that kind of puts a little kind of a kink in this one. And again, if anything, with talk about Cold Wars and everything, or the next Cold War, I'd be looking for 97.56 and 96.10 as two areas where I'd be kind of watchful. All right. Now let's go over and look at gold. Okay, so here's gold. Right. Last week, actually, I guess a couple of weeks ago now, right? Actually, it was the last week, the 18th. Is that right? Yeah, the 17th. Right. All the talk, and again, all this drive up in gold was the talk of what? The next stimulus package. Okay. Since that time, what am I hearing? Am I hearing about, great stimulus, about passing things in the house, about checks each month? I'm not hearing anything, right? Nothing. when you're looking on this side, we talk about, this is talking about global recession bottoming. I'm hearing about, this is restrained, this is bad, ECB, China, digital currency, this, that. What's the end game? Do you guys see anything about stimulus over here? I don't see anything. I mean, I hear about Mike Tyson earning another $20 million in opportunities by fighting again, right? Which he did look good, right? But I don't see anything about stimulus, right? I see no stimulus money here. And that's what the big driver was, right? That's what the big driver was in gold 2 weeks ago. Because we have not heard that, again, we've been looking at shorts in this position. And again, I keep saying that I'm bearish gold, and it's continuing to kind of push to the downside. But we had set up a trade all the way up here, right? All the way up at this 1761 zone. Well, price continued to fall away, right? So let's remove this off the chart just to make it a little cleaner. We had a zone here, and again, we got a little bit of an entry here on the 21st, right? That came in last week. Again, we got another temp there. We can remove that. Okay, so let's remove this to clean the charts. And again, this is on an hourly. Okay, on the 30-minute, again, you can see here, there's some overlays in here. Had a new zone put in, we touched, got front run. Got front run again off a little bit of a basic level. So big question is, where is this going to stop? Like, when is this going to turn around, right? Well, the good news is we do have a level sitting down here in the 30 minutes, down here at 1702. We're back down to 1711. So, it's moved a bit, right? It's pushed back down. It did this kind of, bit of a retrace, kind of halted, and dropped. Well, the last time price was really down in here in this area, right? Kind of where we're at right now. We had a bit of a, it pushed sideways. It pushed sideways here. It rallied off. So we are in an area right now we're looking to base. If we're able to break down, it looks like we will be able to make it down to 1700. Okay, now 1700, okay, we have an hourly zone here. We have a 4-hour zone kicking in right here. And then we have another kind of combination hourly and 4-hour zone sitting right here. Okay, so we definitely have areas below where we have buyers willing to step in. Why? Well, we've seen them step in before. We've seen the reaction off of those buyers before, right? Basing and then pop, basing and pop. So you got to be looking for those areas as potential areas of popping. But right now, I would say, hey, listen, depending on what this basing level does right here, the last time it popped, if we can break below this, again, I'm going to have to say, hey, listen, I'm still short. I'm keeping these areas marked off. I think other areas where we're looking to get shorter up in this range. If we continue to push higher up here, and then again, obviously, all the way up in this range to 1761. So a couple big levels. For me, it's kind of, you have this short, and then we have, kind of long, and then long. I think the best long opportunities are going to be probably 1685 if we can crack that one. Again, there's another one down here, but then probably right around that, probably 1698-ish area, probably maybe right there. Give it a little bit, again, that would be a 4-hour entry on that one, kind of top and bottom for gold. But I think overall, until there's the actual mention of a stimulus, and maybe there won't be now that everybody's reopening. We'll see what the data figures look like this week as far as new cases. That's kind of where I'm at with gold. Silver, our darling, we talked about this one kind of retaking this big level here, right? Because we had this big pop, and what did it do? Nothing. It ended up hitting, and it has not given us the kind of entry to the downside. It didn't go as high, missed our actual entry on silver. We talked about 1786 as being a great sell zone, a 1565 as being a great buy zone, and it just more or less flatlined. It got stuck between 1685 and really 1750 probably. So again, it's about a 50-cent range. I mean, you guys can see here on the 30-minute. Again, we've been, kind of bouncing back and forth. There's an hourly zone sitting, and again, you guys can't, I don't know if you can see it or not, but there's an hourly zone sitting right here. Okay. More near-term targets, I'd be looking at here and here as buying and selling. So 1750 range, I'd be looking for shorts, and then 1680, I'd be looking for buys. All right. Last but not least, let's go over and look at oil, the darling of everybody. All right. So again, just another different website. And again, if you guys are unfamiliar with your charts or you would just want to look at something external, DailyFX provides a lot of great opportunities, a lot of great articles. There's some very talented people that talk over here, and it's got some really great tools telling you like the net number of people that are long and short. Well, it's great too, because I can go over here and look at crude oil, right? And then I can pull up a crude oil chart that's very, very simple and easy. So we did not have the big collapse. So I was mentioning before, I was looking and saying, okay, listen, the last time, when we got to, the middle of the month, that's where we started to see this decline. And the question was, were people going to take physical delivery this month of oil or not? If they didn't, then again, we'd have this thing collapse back down again. This month, we actually held and did much better, right? So dropping down to the lower time frames, we'll drop down to, and we'll go down to an hourly, okay? you can see price has been up in this range before. Again, we pushed back down again. We had a big push down over here on the 21st, right? And again, kind of ground our way. This is that parabolic retracement, right? News-based drop, and then kind of we grind back to where we started. And we're still there right now. I marked a couple different levels off on this one. Let me put the horizontal line on here real quick, the horizontal line, and you guys will be able to see it when we go back. I'm doing this just to make it a little easier to get to where current price is. There we go. All right, so this was probably on a 30-minute actually. But we have a zone sitting right here. Okay, let's drop down to a 30-minute. There it is. I was like, I know it's right there. There we go. All right, so yeah, it's kind of sitting in here. There's a zone approximately in there. All right, let's go all the way back, and you guys can see what we ran into. Okay, now we've already bounced off it once. We bounced off it a second time for a short. Now, where are areas where we could, kind of obviously halt? Well, obviously what we're doing is we're looking for areas where prices had difficult times. Well, there's a difficult time, and what did we do? We took a bounce off of that today. So that's one level we want to kind of keep an eye on. These kind of ascending wicks, I do like those patterns. One that stands out, and again, I typically like, again, for those of you that are not really accustomed to kind of my trading style, I'm looking for areas where there's like nice explosive movement. So, this stopped, popped, boom, and tested. So, there's another zone. Okay, so we have one sitting down here at approximately 31.65. Okay, we have shorts at 34.54. Okay, we have this small, again, this is a small zone, kind of a weird kind of time that this one was printed. But again, took a nice pop off of that one up. This is hard because, again, one wick here, one wick higher, one wick higher. This kind of pattern typically shows you that there's some buyers in there. So, Now, remember, we are 2 days from an inventory report. Okay, we are 1 day back on this one. So I think what would be best on this one is we can get back up to $34 before the inventory report. I think that could be a pretty interesting spot. We'll have to keep track of this one and see how this price reacts. This price is reacting off of, let's see, 31.43 to 31.24. Again, that little kind of 20-cent zone right there is what we just took that bounce off of. It'll be interesting to see what the pullback and then next push forward looks through. So this is our impulse move. This could be our correction move, and then we could have another impulse down, in which case, remember that Harry Potter trade that I talked about, those continuing trades? It could be somewhere along, actually, I'll just do this. Whoops. Do one of these, right? Actually, it would be other way. No. Short position. Something along these lines, right? And again, this is a bit high. This is our 3-to-1 would be right there. Okay. Again, that would be a Harry Potter position, and actually that's not a bad placement, but that'd be getting short approximately 33.24 and taking it down to 32.67. Okay, to the downside. But again, impulse, if our corrective move only comes back to here, then again, looking for impulse moves and positions back up top is where it is. So again, we missed this one by about an hour to the top side. And actually, it's funny, I think put that one over there. I wonder if that one is actually already completed. Let's see, our 3-to-1 is right there. Close. There's your 3-to-1 on the other side. All right, so this is why zones are so important to have. It's pretty close. All right, so there we go. That is what we have today as far as charts go. Don't forget, guys, again, if you have not registered yet, it's inside of chat right now. You guys can click the bit.ly links to take yourself to day one, which is going to be more basics. I'm actually speaking right here. I'm going to do the introduction to technical analysis. Again, I am more of a chart reader, but what I'm going to do is break down what are we seeing in charts? What do you see in candles? What are some of the differences? What are people using for indicators? How are they crafted? That kind of stuff. Really the basics of technical analysis and how you can use it to start applying to what you're doing. And then day two is this, what I'm doing is using ATR to analyze entries as well as exits. It's the question I get asked the most. How are you getting, what are you using to pick your targets and understanding risk and Nadex, there's expirations. How do I determine whether or not, again, it's using ATR. So that's what I'm using. It's kind of an advanced concept that I use. So if you haven't registered, please make sure you guys go in there. Let me see if there's any questions real quick. Kim, great question. I use MT4 because it does a lot of different things. It's one of the, it's an open source platform that everybody has access to. I also use NinjaTrader as well. I've used many different brokerage firms. They're all good. You can use all. IG has an excellent platform as well. I just use MT4 because it has everything on one and it's easy to use. That's why I use that one. All right. So guys, with that said, make sure you mark your calendars for next week, June 2nd. We are changing the name up a little bit. So if you see a different email, just we changed the name of the broadcast. And again, we're going to be breaking down some more charts next weekend at 12. So I'll see you guys tomorrow, as well as on Thursday at the first annual. And again, I hope this is annual, but the first annual Nadex Education Summit. You guys take care and have a great week.